How I Read Support and Resistance, Part 3. Oftentimes, for one reason or another, people believe that price will rise, and because of this, it does. There is always a group of people who witness this rally and wish they had gone long before the rally, but presently feel like the stock may be overvalued since it has recently rallied. So they wait for the pullback when they're able to rationalize that the stock is no longer overvalued to finally go long and make good on their belief about the stock, which ironically was a result of the initial rally. So each time a stock rallies, it sends a message to traders and investors that the stock is healthy and has a bright future. But not everyone who has witnessed this rally actually participates in it. This is the group of people who buy when price pulls back after the rally. This is the group of people who are responsible for the inception of support following a break of resistance. And from here, once this level is established, it is heated for a time due to the visual stake it creates until demand runs out or becomes excessive for one reason or another, and price is able to move on to another level. So why do these people wait until price pulls back to enter into their long positions? The logic behind this action is that if price broke above a former resistance area, it is shown that it has enough demand to overcome the current supply. So first they understand that they've witnessed the inception of an area of demand. The next step in a successful position is to get a good price for the stock they think may go higher. And this is where that small area just above the previous resistance comes in. You see, they all know that demand has just come out of that area. Congruently, they are all looking for the optimal time to enter into a long position. The sweet spot is just as price comes back down and approaches that same area that it just demonstrated so well that it could defeat with demand. In an abbreviated manner, those who wish to buy know that there are buyers there, and that it would be wise to purchase there as well, since price is not likely to proceed down through the area it just worked so hard to get out of. What's more, both the bulls and bears have witnessed this defeat of resistance, and so the bears don't tend to fight at these areas as they have become momentarily demoralized by post-defeat fatigue. So why does price pull back momentarily after it breaks resistance if there now exists a strong bullish element? It pulls back for several reasons. 1. Because those that originally bought through resistance might have been in it for the short haul and be ready to sell their longs out, thereby creating supply after a demonstration of demand. 2. As one happens, others notice price begin to stall and attempt to capitalize off of the short-term down move. 3. As price begins to turn lower as a result of 1 and 2, there is usually a group of longs who had held on a little bit longer as price moves down, but eventually succumb to fear and bail out of their positions as price nears newfound support, thereby bringing price even closer to this level. 4. There are many market participants who simply don't have a good picture of what's going on and are quite possibly selling because they see others selling first. As we'll delve into later, this is the element responsible for those who do know what they are doing getting a great price on long positions following the pullback to newfound support. As price lowers back toward the area it just broke through, less and less people have incentive to sell, so sometimes it is a challenge to see price move all the way down to newfound support. Another factor in determining the strength of support and resistance is the way price interacts with such levels. If price touches a support and resistance level or even skates along it for a while and then suddenly shoots out away from it, we're only to assume that this is a fairly formidable support and resistance level. An even stronger indication of an increased level of supply and demand is when price swiftly shoots down to an area and just as swiftly shoots back up. This means that there was a large amount of buyers down at that area, which prevented price from spending too much time there at all. Because of this drastic response, we are only to assume that this is an area of an elevated amount of demand. Often when price is approaching an area of resistance, the amount of people waiting for the break of that resistance increases. And sometimes this factor alone is the reason why price does not have the necessary force to break this level. For example, if price were moving upward towards an area which had demonstrated strong resistance in the near past, most bulls would be waiting for the break of this resistance before they entered into their positions. Now, remember, the bulls are the group responsible for hitting the ask enough to push price up and through areas like this so that it may invite more buyers into the market, and together they could ride price to the moon. But what happens when most of them are unwilling to buy until someone buys price up through resistance? They would need someone who isn't afraid to buy into resistance to take on the bears and absorb all of the supply caused by those who wish to play the bounce off of resistance, as well as, depending on where price had been before, those who are reaching the break-even point of their long positions, which had previously gone against them, locking them in, and leaving them considering a break-even point a blessing. But before this happens, the bears are much more likely to seize control of price and begin to ride it down, causing a proverbial bounce off of resistance. Also, since a number of participants who trade stocks are speculators, we're going to see traders who play both sides. So many of the same group of bulls that had been waiting for the break of resistance before they went long are now perpetrating their bullish persona for a bearish one as they begin to sell the bearish momentum.